5 years ago, I was sitting in a meeting room and a senior analyst said something that I've never forgotten. He said, the retail trader is our best client, and not because they are good, just because they are predictable. They make the same mistakes every single time. And today, I will be showing you what those mistakes are, how you can avoid them, and the real shortcut to become profitable even if you have no knowledge, very little capital, or if you just start trading today. The only thing you will need is to watch this video until the end, take some notes, and not skip the video to go to the end to have the special gift that I'm about to give to you. But before I explain to you the strategy, let me explain to you who I am. My name is Falco. I've been a trader for 8 years. I spent time into institutional finance, and I'm being intentionally vague here, but what I saw changed how I understand markets completely. I wasn't a trader there. I was in a different seat, and that seat gave me a very different view of what was happening on the other side of retail trades. So there are 3 specific behaviors that banks count on retail traders doing. If you do these, and statistically you do, you are funding the other side of the trades. And today, I want to go through all 3. I'll give you 1 and 2 now, but I really want to take the time to build 3 because 3 is the one nobody talks about, and it's the one that blew my mind when I first saw it. Most retail traders are emotion driven. They are not looking at the structure, and this is why I'm going to be talking about behavior number 1, stop hunts, what banks see that you don't. And we're going to be, of course, talking about how retail traders place their stops exactly where the books say to place them. Here we are. First thing, what is a swing low? It's going to be the lowest candle in a section of the chart with wire candles on both sides of it. So basically, the chart will show you that we have a bearish price, for example, on gold, and you can see that the price goes back up. And most of the times, this swing low, so the lowest point of the chart in the time frame that you're looking at, will be, I would say, a criteria to place stops for retail traders. They will place the stop just under, okay? So how does it work? On a long trade, you're going to be placing stops just below the last swing low. And on a short trade, often retail traders will be placing stops just above the last swing high. Okay? And if you need to understand what is a swing high, it's the complete opposite of a swing low. So once you know that, you can see how it looks like on the chart. You basically have the red line showing how the retail stops are clustered here. So you had this big red candle here where that was the last swing low, and most retail will just place their stop just under, take a buy. And taking a buy is not a bad move if you look at what the chart and the price is going to do. And this is the whole big problem of retail traders. They keep losing even though they are right on a long-term analysis. Yes, the price will go up, but you will lose before your analysis is proven right. And this also impacts your psychology because you keep saying, yes, but I was right, so I'm gonna keep trying. But you're just having the wrong tools here. So the stop hunt candle is going to get all the retail stops before price actually reverse. They're going to use your money to be able to fill their orders and to get the price back up. This is exactly why you do not want to place your stops like a retail. So this is the 3 act sequence of every stop hunt you will see on the market. The first one is the retail stops cluster. Beginners place stops at the same technical levels, just below swings low, basically just above swing highs. This creates a predictable pool of orders, and let me tell you how institutions use this pool of orders. So point number 2, they identify the pool. Order flow data and in-depth of market analysis make stop clusters visible. What looks random to retail is a roadmap for institutions, okay? And this is an important point, okay? Number 3, price sweeps the levels. So basically price moves just beyond the stop level, retail stops trigger, they become market orders that fuel the institutional fill at a better price. So they also give the opportunity to institutionals to go back with new orders at a better price because they use the liquidation to actually enter new orders. And finally, point number 4, there's an immediate reversal. So basically with liquidity collected and orders filled, price is going to reverse. And this is where the price will go back up, even though you placed your trade as a buy. So you've been buying a market that will go in your way, but you will not be able to be in the trade anymore because you got stopped before. The retail trader is stopped out at the worst point, then watches the price go where they expected. I am 100% sure that this pattern that I'm describing here is something that you've been living if you have been a trader for a long time. If you're discovering trading, well, you should be grateful because this is probably what burns so many accounts of beginners. even though they watch a strategy, they do not know how to place their stop. And this is a big problem. Once you know that, well, there's the chart behind the chart. While you read price action, institutions read the liquidity map, a layer beneath the chart that shows where clusters of orders are waiting to be triggered. So they have a tool that gives them the opportunity to know where the stops, where the orders are ready to be triggered. And once they know that, they will just get you there. So you do not have to be more smart than the institution, because this is basically not possible. You're not playing with the same tools, but you just need to run faster than the guy is gonna get basically destroyed by the institution. So you just need to run faster than the slowest retail. And this is really an important thing you can visualize in your brain. Think about a horror movie. This guy running at you, you're a group of people. You don't need to be the fastest. You just need to be faster than the guy who's behind you. And this is the whole point. So your stop placement is probably wrong. It's not the logic of what you do, it's the location. Okay? And it's important. You should really look into using AI to understand where retail stops are placed and where you should place yours. So here you can see what most traders do. They stop exactly at the swing low. They use round numbers as stop targets, which is a really beginner move. It's a noob move. They set stops first, entry second, and last but not least, they ignore liquidity map entirely. And this is what makes them lose. What Falco does and what we do in the group, which is in the description of this video, well, stop beyond the sweep zone not added. We place stops where sweeps are unlikely to reach. We identify where stops are clustered first, and we ask where does price need to go for liquidity. And those are really simple questions, and all the answers are in the group, which is 100% free. I sell no courses. Just go in the description, check it, and you will see we are a big community of people trading every day. Okay, so this was a small reminder of the first point, the first mistake that I've been witnessing as a person that has been working in a very big institutional bank for a long time. So let me give you a proper example. This is not a trade we've been taking, of course, but I just want to make you understand how it works, how retail traders think. So basically, you can see that the lowest point here, okay, the swing low here is basically at this point on Bitcoin, and you might think the market will not chase under this area, you know, and that's basically, and it makes sense, the selling pressure has been rejected and the price went back up. And as you can see, you can even think about a structure like an uptrend, okay, a bullish structure, because you've got the lows that become higher and higher and higher, and you've got the highs going higher and higher and higher. And this is the case here. Basically, you have a sort of micro shift of trend, okay? And you might think, okay, this is going back up. I'm entering here. It's going to go back down here and go back up, okay? But as a matter of fact, as you can see, it shows every time that retail traders are thinking the same way as you want to think, okay? And this is why you need to be in the group, which is in the description. It's 100% free, and we take trades that go the other way around. You know, we do the contrary as retail traders do, and this is why we make so much money. But here, as you can see, by the way, the trend didn't even go the way this trade would have made you think. But let's take another example. So let's imagine here that the lowest point, imagine that we're here, the lowest point is this one, and you can even have a second confirmation, where you have another swing low here, and it basically shows you that 2 times the market has been rejecting selling pressure, and you think, okay, this is safe. I'm going to put my stop loss. I'm going to enter the trade just here, and I'm going to put my stop loss just under, okay? And I'm going to be targeting, I don't know, this zone, this area, or even less, this area, okay? Great. Here, you can see that you have the right analysis. The market will go back up, but it will chase your stops just before, proving your analysis right without you inside the trade. And this is such a difficult feeling when you are a trader, And yeah, you were perfectly right, but if your stop was just there, you would have won. Here, you're not in the trade anymore. So do not flex your analysis, because most cases you get stopped and you still think, oh, I'm good enough. I had the right analysis. No, you have not. So you need to change this. Here is where something completely changed for me. I started using AI to analyze the same structural patterns that analysts used to take hours to make. And we can make that happen in a minute. Let me show you how. The second point, making institutions love retails as clients, is basically the emotion they have when they trade. And this 95% of cases create overtrading situations. And most of us know that. Whenever you're in front of the graphs and you take a position, well, you're feeling kind of satisfied because you love what you do. And this is the big difference. Most institutionals really don't have an enjoyable situation. They go on the grass, look for opportunities 10 hours a day, and sometimes they basically have nothing in sight. Most retails will force the entry they have on trading because they actually enjoy it. It's a moment of pleasure and they want to live it. So this is why I use AI, and I'm gonna give you a solution to the problem of overtrading that you might face by just using ChatGPT. It will give you a simple prompt that will end overtrading forever. And I don't have to sell it in a course. It's just right there in front of your eyes. You guys should subscribe for this because this is pure value. I'm giving you the whole prompt. You can find this prompt if you just want to copy and paste it, but also all the other prompts we use directly in the group, which is in the description. All the value is there. As you can see, I gave him the ability to become a compliance enforcer and a trading risk officer. This is people existing in institutions. Traders are followed. They are driven by this kind of people. So I have ChatGPT here, but you can use Gemini, you can use Claude. You can basically use whoever you want as an assistant, but why not? This is a job that is well paid in banks, and traders are not trading by themselves. So I'm using ChatGPT to force me to follow my plan. It will validate compliance of my trades, detect psychological bias, and evaluate structural quality of my trades. This is incredible. If he denies, well, it means one of the rules of my plan is basically broken, so I cannot trade. Probably the best prompt you will see on YouTube. For that, you guys should subscribe to the channel and maybe send that to a friend if you wish to help him in any way. Now he will operate as a trading risk officer and psychological compliance officer. Okay, you can change your rules by changing the plan and the prompt. Here I put 1%. I know you guys like to trade with 1%. And as you can see now, I can just send him, every time I'm gonna enter a trade, I can just send him the potential trades. So I can just go on TradingView, take a screenshot, send it to him, and he's gonna say, look, man, you're not following the plan. Or yes, you can go. Okay, and every time I make a loss, well, he's gonna activate a daily lock and he's gonna tell me that there's no negotiation, you know, there's no possibility of me to trade. So the only thing I need to follow here is just always be in this conversation before I trade. This is the only thing that I can't automate for you. Okay, but this is great. You should use it. Hope you enjoyed it. Last point, and the most important to me, of why institutions love retail traders as clients and why they love to face them even more in the market, because trading is a fight, is basically the lack of information that retail's trader have to deal with. As a retail, you know nothing. You have no real pattern that disturbs you on the market and makes you want to enter. You have no edge. And this is due to the fact that you don't have the same tools, but also because you try to get courses on the internet that cost $3,000, $4,000, $5,000 pounds to get information unknown from other people, but this is not what you should look for. What you should look for is a clear blueprint giving you a strategic way of operating and a way to find the right information to enter any position. After that, you've got that for life and it will always work. So you'll see it in a minute. I'll hand that to you completely for free, more than 200 pages of a clear blueprint that you can apply step after step and 100% for free. I'm not going to be selling that. If you want to support me, don't pay me. It's for free. You just put a like under this video. You can take the time to write a comment. I read every comment I have, and yeah, you just need to go in the description and get it for free. You don't even have to put any email or information. Let's go on my laptop and see that by yourself. And as you understand, you are just entering the rabbit hole concerning trading. It's a lot more difficult than scammers try to make you understand. And this is why we have a blueprint that we give to everyone entering the Telegram channel in the description, explaining to you with 200 pages every kind of pattern, session, and things you will have in front of your face in the next years, and all of that for free. So if you just want to catch that, well, give me a comment, go to the description, send me a message there. It's free and I will give it to you. Basically, this is it. Video is coming to an end. If you want to see more, subscribe to the channel, go check the other videos that are available for free. And I hope you enjoyed it. It was Falco. See you next time.